Rob, I'm coming over to you. You're long on Meta. What was your take on this quarter?
I think really positive, accelerating growth across the board. They continue to execute. They highlighted some of their use cases for AI. Stock's still not expensive. We got long at about 10 times. And, it's trading at 20 times next year, 23 times current. And so I think this is one of those companies that if they can continue to focus on cost and see their core business reaccelerate, which they are, it should have some more upside relative to the rest of the sector.
Yeah, Facebook showing some gains as well. A lot of people thought people were migrating away from that platform. Carrie, you own Facebook as well.
Yeah. Well, what we've seen is what we expected, which is started with cost cutting and cost rationalization, and they had excess employees and they had projects that were very, very unprofitable. So they did all that, and then we were in a recession for digital advertising, and now we're coming out of that recession. We're starting to see better numbers in terms of usage and impressions. The prices are still weak. Prices are still down 18% ad prices, but once you have demand, kick in for a while, we'll start to see better pricing, and that will move the earnings and profitability. We really liked what we saw on Reels. Anything that's to Twitter's detriment is to Meta's benefit. And, the company is still, as Rob said, not expensive. It's 20 times next year's earnings. There are a lot of people who haven't gotten into it. They are looking for a name that's not excessively expensive relative to the market. Meta seems to fill that category. It's a name that people love to hate, and now they love to love.
I mean, good point. Right now we're seeing UBS, Jefferies, RBC, and Mizuho all bumping their price targets to $400 a share for Meta. Josh, I'm going to come over to you. I should have called you Thready Van Halen, Thread Yardeni. You were taking you were giving yourself a lot of titles. I want to come to you with the other side of this argument, just to play devil's advocate, because obviously the stock's up big right now. Citi out with a note. With the bear case here, this is Citi's bear case, Threads not fully fleshed out, and uncertainty around how scaling it out will impact Meta's broader ecosystem. Do you have those same concerns?
I don't think Threads is the reason why the stock is up today. I don't necessarily think that the numbers that Threads is capable of doing in its first year are necessarily material. I think the stock is fine with or without any meaningful contribution from that area. I think you would think about Threads the same way you would think about hardware. Meta's hardware division was just atrocious this quarter. You're talking about down 40% year over year. The Quest unit found a way to lose $4 billion. I don't even know how that's possible, and yet they managed to. $276 million in revenue. It's a rounding error. It doesn't matter. 98.5% of Meta's business is advertising. The advertising business is re-accelerating, to Rob's point. So that's what really matters. If, in fact, something happens with Threads where they can somehow sustain the momentum that they got in the first few weeks and they can figure out ad form factors that are a winning product for advertisers to stick with, that's great. It's going to be a long time before that's actually a net contributor. It's more of an interesting thing for people in the media to talk about right now than for people that are investing in the stock.
What about Llama? Are you excited about the prospects of Llama? Also the fact that they're actually going to pick up spending when it comes to data centers and hiring, actually saying they're going to have to hire more higher earning people, engineers, and people to build out their AI capabilities.
I have to be honest, I'm more excited about things like Llama for my holdings in Amazon, my holdings in Alphabet, because really what that is about is the cloud and data centers, and my NVIDIA holdings. Those will be, in my view, bigger short-term beneficiaries of the build-out of various AI programs all over the street, much faster than they will accrue to the bottom line of the company like Meta, which I still think they should make that investment. I just don't see that as a profit center anytime soon. Ads is good enough. It's the best ad platform in the world. It's plenty. Like they don't need all these other businesses to kick in and contribute anything meaningful right away.
Not worried about all the bells and whistles, but are you encouraged by the fact that they actually cut their workforce by 14%, and that doesn't even count all the people they laid off, according to them?
Yeah, look, I think it's very rare that you could have a company make cuts as sharp, as acutely, and as quickly as Meta has, and actually see revenue reaccelerate. And what that tells you is not that this is some sort of miraculous restructuring. It tells you that the strategy of just throwing as many people, engineers, whatever they were, marketing people, et cetera, throwing as many people as you can into the mix and thinking that's going to grow your company is a bad strategy. It's one of the excesses of the post-pandemic period that we should all be glad we're seeing the end of. You're not going to see companies go back to that next year just because their stock prices are up again. I think it was a really great moment in time for the tech giants to learn that if they want to stay giant, head count isn't the way to do it.